What is a reverse mortgage? How do I pay it back? And how does it work? We're joined this week by Trevor Gordon of Home Equity Bank, and we pull the curtain back on reverse mortgages. Hope you enjoy.
You're listening to the Saskatchewan Real Estate Podcast, where we chat with real estate experts from across the province to learn what's happening in the real estate market. Here's your host, Ron Quaroni.
Hello and welcome everyone. My name is Ron Quaroni, your Saskatchewan mortgage professional, and today we are excited to have Trevor Gordon on the line. And Trevor, we're talking about reverse mortgages. Before we get to that, first off, welcome and tell us a little bit about yourself.
Well, thank you, Ron, and thanks for having me here today. It is absolutely my pleasure. So I am the Business Development Manager for Manitoba and Saskatchewan for Home Equity Bank. And Home Equity Bank, we are the provider of reverse mortgages for Canada.
So, Trevor, let's start off with the obvious question. What is a reverse mortgage?
Well, that's a great question, and I've got a real simple answer that I'll expand on a little bit. A reverse mortgage is simply the reverse of your traditional mortgage that you might go to the bank to try to finance. And really, the one main difference between the two is with a traditional mortgage, you, of course, make monthly payments. Part of that payment you make goes towards the principal, and part of it is the interest. So it's a declining balance. So that amount that you pay towards the principal, that is going to decline the balance of the mortgage that you owe. With reverse mortgages from Home Equity Bank, the client does not need to make any payments. And of course, the balance increases. Now, what's really funny about reverse mortgages is the concept actually dates back to 400 BC when land was actually used as payments towards things. Now, Home Equity Bank started as CHIP, and you often still hear the term CHIP being used. And CHIP actually stands for the Canadian Home Income Plan. And that company was developed in 1986 in Vancouver, British Columbia. So since then, we've expanded all over Canada. And back in 2009, Home Equity Bank actually changed its name, and we actually became a Schedule I bank. And we are the leader in reverse mortgages for Canada.
Wow. Thank you very much for that comprehensive answer. And so when we're talking about reverse mortgages, who are they for typically?
Well, our qualifications from an age standpoint is for anyone that is 55 up. And, there are, and it's funny that you asked that question. So just to let you know as well, the average age of our client is approximately about 72 years old. Right? And again, we get a range of clients from 55 all the way up to while I've not personally done one, I know we do have clients that are over the age of 100 that we've, provided mortgages for. But there's really three stages of retirement life. The first stage is the go-go stage, and that's from the ages 55 to 75. And that, of course, as I said, it's the go-go stage. That is when, you are going to perhaps Florida for 6 months out of the year and you become a snowbird. You're playing your golf, you're playing the sports, you're doing the things that, this is what you anticipated in doing in retirement. The second stage is actually what we call the slow go, and that's from 75 to 85. And that's when things start slowing down a little bit for various reasons. Maybe you're not going to Florida for the 6 months now. Maybe you've downed it to 2 months. A reason for that could be that the cost of insurance to go down is just that much more expensive because there's been an illness, a condition which has made it, difficult to get the insurance. And like I said, things start slowing down there. And then we have the no-go, which is the 85 plus. Now, I have a question for you, Ron, on that. Out of those three stages, which do you think would be the most costly, where the most money is spent?
I would probably say the go-go stage.
And you've answered that like 99 out of 100 people would. The same that I answered it when I was actually asked the question. It's actually the no-go stage is when, and there's a myth out there that if you ask most people, they say, oh, the older I get, the less money I'm going to spend. And that's wrong. That is a myth out there. The no-go stage is definitely the most costly. And that mainly has to do with healthcare, because healthcare costs start getting very, very expensive for various reasons. And that's why the most amount of money is spent in that no-go stage.
So for people going through those three stages, is there a breakdown of when most people decide to use the reverse mortgage, Trevor? Are there any metrics on that?
Well, like I said, the average age of our clients is 72. So that's really right when they're coming from the go into the slow go stage, is when they really start now looking at their finances to say, perhaps this would be a good idea. Keep in mind, we are living longer. And I actually saw a recent newscast on 60 Minutes, and not that I watch 60 Minutes a lot, but it was actually a few weeks ago. I was actually watching the end of the Gulf, and they had a preview of this 60 Minutes news article that they were going to do, and there was an aging expert on this newscast. Now, of course, she was from the US, but she said something that's just incredible. She said that half the children born today, half of them are going to live to the age of 100.
Incredible. And that's mostly to do with healthcare and quality of life.
We are living longer than ever before. And, one of the reasons why we are such a popular product and that we're growing so much is that when, people started planning for retirement, the planning wasn't done for you to live past 85, past 90, past 95. It just wasn't done back then. I'm not exactly sure what age was being used, but of course, if you create a plan to say, okay, well, this will give me the money I need till I'm 81, well, people are living long past that now. And as a result of it, we've become a much, much more popular product. And like I said earlier, month after month, we're having record volumes.
Yeah, in a positive sense, it's a very good thing that people are living longer, extended lifespans, but that does cause an issue if the finances haven't been planned to live longer, because it does cost money to exist and rent and live. And of course, as you touched on, healthcare as you get older.
Yeah, but the good news out of all that, while their financial plans may run out and make them short of their financial needs, our clients have all this locked up equity in their home, and Home Equity Bank gives them the ability to use that in an easier way to make them live the lifestyle that they deserve to live.
What are some of those qualifications, Trevor, that go into deciding if someone can take advantage of a reverse mortgage?
Yeah. Well, the number one, of course, is equity. So the more equity that they have in their home right now, of course, the more money that they're going to qualify for that we'll be able to give them. So equity would be the main deciding factor. Number two, of course, is age. The older you are, the more money we're going to give you. So, somebody that is 75, well, we're going to give them more money than somebody that is 55. Because you have to realize that somebody that is 55, if we were to give them a high loan to value, they could technically be in that property for, another 40 plus years, not make a single payment to us. So we have to look at that from a risk standpoint. We typically cap out on loan to value, meaning, the 55% is the max that we'll lend out. That typically caps out when somebody is in their lower 80s, right around about 82. So once you hit that point is when you can maximize on the most that we're going to lend out to you. Also, too, what's very unique about our program is because there's no required repayments, we are allowed to qualify differently than what your traditional banks are going to use for qualifications. One of the main ones is, your debt service ratio. We don't have a debt service ratio per se for when we do look at a situation. Neither, we often hear every time you watch TV, it's about, improving your credit score and getting, the higher the credit score, the better you are and the better situation that you're in. We don't have a minimum credit score requirement when we do underwrite. So, we'll lend as low as, and I see such a very, very wide range of clients. And again, it's going to differ on what they want to use the money for. And one other thing that is great about our product is we are the only alternative lender in Canada that will basically lend everywhere. We are from, British Columbia all the way to Newfoundland and Nova Scotia. And there is no restricted lending area per se. So we will lend in the major urban centers, but we will also lend in the rural areas as well for clients. And there are no other lenders from an alternative standpoint in Canada that, can say that.
A person out there, Trevor, they're looking at this and they say, it seems like a good product. I could really take advantage of that, but I am afraid of giving up ownership of my property. How does the loan get repaid?
Well, and Ron, you brought up a very good point there as far as the ownership goes. There are several myths about our product that used to happen with some of these reverse mortgages companies down in the United States where they, would take ownership of the property and everything else. With the exception of not having to make a payment to us, we are no different than any other type of mortgage. We register it the exact same way. There's absolutely nothing different from that aspect of it. Again, as far as paying us back, again, not really much different than your traditional bank mortgage. It must be paid out when the property is sold or when neither of the applicants are no longer living in the property, then we require it to be sold. And that can take place either when the house is, we would receive the money when the house is sold, or if for whatever reason, if, a client took out a reverse mortgage with us today and won the Lotto 649 tomorrow, they can simply just pay us back, no different than they would of any other type of mortgage on that end. And, I did mention earlier that no payments are required. We can set it up where the clients do pay us the interest back on a monthly basis. Most don't do that, but the option is there for the clients.
So the repayments are based upon the equity in the home, Trevor, or the amount that's been lent out to the individual?
It's the amount that's lent out. So for an example, and again, I'm going to just throw numbers out there. These might be off. I'm just going on the top of my head. But let's say that somebody took out $50,000 as a mortgage with us. While the interest payments on that at the month at the start, could be $275. So we can set it up where the client pays us back the $275 every month. So at the end of it, when they do decide to sell or pay us out for whatever the reason might be, the balance would only be that $50,000 that they originally took out. Right? But what's also great about a program as well, and this happens quite often, is, again, let's go back to that same client that needed $50,000 for whatever the reason was. And let's assume, though, that they qualified for $200,000. Well, we can set it up that they take out the $50,000. The only cost to them is on that $50,000. But if anything was to happen in the future, for whatever reason it might be, that extra $150,000 is available to them if they so need to. All they need to do is give us a call, and within 48 hours, we can deposit money into their bank.
What are the qualifications on what can be lent out for? Is there a stipulation that the money must be used for something, Trevor? Or once the money's been lent out, can it be used for a variety of things, whether that be helping children, vacationing, healthcare? Are there any qualifications on that?
Yeah, that's a great question. So, of course, number one, if there's currently mortgages or any type of liens on the property, they, of course, have to be paid out with the initial advancement. However, outside that, we have such a wide range of clients, and I mentioned to you earlier where we don't have a minimum credit score requirement. I mean, we see clients that they're behind on all their debts. They're behind on their property taxes. They owe. They don't have the money to afford heat and food, and we're able to advance them funds, which is a complete change of lifestyle. We have other clients too that are, in a standpoint where they're in good shape. They don't have a whole lot of debt, but maybe they want to give an early inheritance to their children, and they want to give them the money now because they want to see the kids enjoy it while they're still with them. We've given money. There was a retiree that he was retired for I don't know how many years, and he decided, what, I need something busier to do in my life. So he actually bought a franchise of a restaurant, and he actually used that money to purchase the franchise as well. So we see a very, very wide range, and it's really interesting, the different clients that we see and what the money is used for. If I had to sum up one reason as a result of what the money is used for, mainly it's used for debt. And that could be, a current mortgage that they have on the property, credit cards, line of credits, whatever it might be. Right now in Canada, 66% of all retirees still carry credit card debt. And, and that's easy for it to continue to grow and grow and grow. And we're here just to give them that breathing room where, they can pay that with a reverse mortgage and not have to worry about, meeting their monthly payments or getting calls from creditors or whatever it might be. So it's such a very wide gap that we see from our clientele. Another thing that I've seen quite a bit lately, and I guess I wouldn't use the word shocking, but we have seen that in our payouts and in our debt loads that we're seeing from clients is the use of payday loans that are out there. And they're a very, very expensive way to borrow. And they really, at the end of the day, I question of how good they actually do. I don't think they really help you out much on that end. If anything, they just make the hole a little bit bigger. But recent news articles as well on those payday loan companies is, their collection methods are extremely aggressive. And, I picture my own, mother in her late 80s getting a, harassing phone call, to bring in $25. We're there to help to avoid those situations. But, in summary, at the end of the day, we are the bank that gives retirees the ability to live the lifestyle that they deserve.
Wonderful. Awesome stuff. Thank you so much for that, Trevor. Is there anything else to add on reverse mortgages that we haven't quite touched on, or any last words on that?
Well, I think I went over a lot of the details, but one thing I do want to say, and I speak to a good percentage of the clients in my region of Manitoba and Saskatchewan, and quite often there's that embarrassment stigmatism that is out there. I had one client, say to me that, I'm 78 years old, I shouldn't be in this position financially. And what's very important is, letting them know that they're not alone, that, that it's nothing to be embarrassed about. Yes, there are people out there that, fortunately were in a job that had a pension, that, they were able to do savings. Not everybody is in that same boat. And, pensions are becoming more and more a thing of the past. And, without a pension, it's extremely difficult to, live the lifestyle that, you should be living. So the one thing I do want to say is there is nothing to be embarrassed about. It's not too good to be true. I get that as well. It's like, what's the catch? And it's like, there is no catch. This is what we do. This is what we specialize in. It's the only product that we offer are reverse mortgages. And again, it can be from the end of somebody that needs a lot of money to pay out debt, or it could be simply somebody that, all right, I don't really have any debt, but I'm finding that, I can't buy everything I want at the grocery store. I would like to have a little nicer car, those things. And we can actually set it up instead of a big lump sum going to the client. We can set it up where we simply give them a monthly annuity that goes into their bank account, which they can use as well for, just their daily living needs.
Awesome stuff. Shifting gears a little bit, Trevor, here. I asked this to all the guests that come on. If you could go back to a younger version of yourself and give yourself some advice, what would that advice be?
Yeah. You know what? That's a great question. And this is something that's all I would say to myself is that at retirement, we unfortunately, as Canadians, we cannot rely on the government to help us out. The current plans in place from the government are not enough. So I went back to earlier where I mentioned about a pension. Well, outside of a pension, the only income that you're going to get is OAS and CPP. Right? And if that is somebody's, whether you're a single person or married, that is not enough money to live on. And, I've been with Home Equity Bank for 5 years now. My previous 25-year career was in financial services and everything else. And I, since coming to this company, I didn't realize about the inadequate, plans that are there from the government to help people out in their retirement years. It is not there, and you have to plan other avenues in order to be, protected, on that end. And that is really the only advice that I would want to give. And yes, the government is there, and they do help out a little bit, but it's not enough.
Trevor, thank you so much for taking the time out of your busy day to sit down and educate us on reverse mortgages. I've really gotten a lot out of this just myself, even being in the space of learning how these things work. So I really appreciate you taking the time. And I know there's a wealth of knowledge here, so I really appreciate it.
Oh, thanks, Ron. It was all my pleasure.
Have a great rest of the day.
Thanks. Okay, take care. Thank you.
Thanks again to Trevor for sitting down with us today. Really appreciate his knowledge and time. If you have a question about reverse mortgages and how they work, please feel free to reach out. If you enjoyed this episode, hit the like and subscribe button. I'm Ron Quaroni, your Saskatchewan mortgage professional. Until next time.
This has been the Saskatchewan Real Estate Podcast. If you like this episode, find more information and episodes on our Facebook and YouTube pages. If you'd like to be a guest or have a conversation you'd like to learn more about, let us know by messaging the show on Facebook. Thanks for listening.